Hi, good afternoon, everyone. Bitcoin is back in the spotlight this year after making more than 80% gain over the past 6 months. Cryptocurrencies in general seems to have survived another winter season, which took place from early 2022 to late 2023. During this period, we saw the collapse of Terra Luna, FTX, and Hodl, which was a Singapore-based cryptocurrencies platform. Previous CEO of Binance, CZ, was also charged by the SEC for violating US money laundering laws. At its lowest, Bitcoin was trading at about US 16,000, but has since recovered to reach an all-time high at USD 73,000 during March this year. Is this another crazy speculation ready, or is it backed by real demand from financial institutions and government across the world? Today with me, I got a good friend, Timothy from Dollar & Cents, Jared from Beansprout, and Tejin from FSM research team to delve into deeper discussions on Bitcoin. So to my lovely panelists, I have a few questions for you. So we start off with, have you ever invested in Bitcoin or other cryptocurrencies? And what is your current personal view on this asset class? Maybe you start from Timothy.
Okay, hi everyone. I can't see you guys because the lights are too obviously too bright, but I know there's a lot of people because it's crazy when I was trying to walk down. I was like, can't even walk through the steps now. So I will just try to, the question is like, have I invested in Bitcoin or any other cryptocurrency? So straight up, I wanted to ask who has invested in crypto, but I can't really see. So if you have invested in crypto, can you just put up your hands? I'm just trying to see the crowd. Like, yeah, Gerald, you included, right? You invested as well. Okay, a few hands. Okay, so for me, no, I have not invested in cryptocurrency. I have written about cryptocurrency for many years, but as a asset class among other things, but I have not invested in cryptocurrency. My current point of view is very simple. I think cryptocurrency is very attractive for people who want to speculate and make money in a quick period of time. But so is gambling, right? So if you watch sports, if you watch the Euro or World Cup, or if like me, you watch the UFC, you will know that they always try to encourage you to bet, right? And you can make a lot of money as well. But so cryptocurrency offers the same value. But that said, there's also a lot of other investment opportunities out there that also pays a lot of good returns, but without so much of that speculative risk, right? Or they are more robust. So that's my point of view. But I'm sure Gerald has something different to say.
Okay, hi everyone. So I admit I've invested in cryptocurrencies and NFTs before, but this is really because my philosophy is to actually be able to find out what these assets actually are, so that if anyone were to ask me, oh, how is investing in cryptocurrency like different from maybe investing in stocks or bonds, I'll be able to share my personal experience and also to find out really what this is about and to then make my own judgment as to whether this is suitable for me or not. Okay, so I think back to what I've always been asked is that whether I've made like investing mistakes. I would say that one of my investing mistakes was actually to invest in a NFT, which is actually not worth anything today. And I'll often say that, oh, if anyone wants the NFT, can get it from me for free, because actually the cost of transferring to you would actually be worth more than what the NFT is worth. Okay, but I think it goes back to what I also believe in, that in terms of investing, it's always about risk management. So while I may have put aside some investments into cryptocurrency in the past, I think the key is always to know what are your risk limits and then how does that affect your overall portfolio. So for me, if I just put like $500 into testing out how the process of buying Bitcoin is like, I know before I actually invested into it in that, okay, this $500 is something that I can afford to lose, even if it were to be going to zero, or even if the platform were to collapse. Okay, so this will not actually affect my overall portfolio in a significant way. And also, I will not be losing sleep over it. My relationship with my friends and family will not be impacted at the back of it. So I think, yes, I've invested, but it ties in with two of my personal beliefs in that it is important to just understand what some of these new technologies, new investment assets are about, but then at the same time, managing the risk such that even if things were to go wrong, it is not something that wipes you out.
Okay, Josh, to answer your question, no, I have not invested in cryptocurrencies before. So as such, I think my knowledge on this segment would be rather limited. But what I would say is, I think that some of the cryptocurrencies, maybe the larger ones like Bitcoin and Ethereum, they probably have some practical use cases in real life. But I would say the majority of the other smaller cryptocurrencies, like your altcoins, especially your meme coins, those are just purely speculative. So if you take Dogecoin, for instance, I believe it started out as a joke, but at one point in time, I think the market cap was worth around 70, maybe 80 million US dollars, billion US dollars, which is crazy. And common sense tells me that you shouldn't be buying things like that. So my stance on crypto is if you want to buy a bit just to speculate, by all means go ahead. But for long-term investments, probably the altcoins, the meme coins, you shouldn't be touching those.
Seems a lot of people are dog lovers. Maybe among the two of you, do you ever invest before? Maybe you can tell us the main difference between investing into cryptocurrencies against the traditional equities and fixed income.
Okay, so the way that I'll see the differences is that number one, whether is it a regulated asset? I think that is always something that we get investors to think about, whether they invest in a particular asset class or before they start using a particular platform. So first and foremost, we need to understand that if you are actually investing through a platform like FSMOne, if you are actually investing in stocks, there are tight regulations around this, but that is not the case if you were to be investing in cryptocurrencies, both on the asset level as well as on the platform level. Okay, so that is the first important thing to take note of. The next actually comes down to fundamentals. I think 𝗪𝘃 earlier alluded that you can actually look at the fundamentals of stocks or bonds. You can read the research that is put out by analysts like himself when analyzing stocks, ETFs. But the same can't be said for investing in cryptocurrencies because oftentimes it cannot be something that is justified by fundamentals. The last point I'll make is really in terms of the volatility. We have seen that for cryptocurrencies, historically, the volatility has been a lot higher than traditional asset classes like stocks and bonds. So then it ties back into whether that is something that fits your personal investment objectives as well as risk appetite.
Thanks. Timothy, you mentioned that you never invest before. Maybe you can share with us what are the main risks associated with Bitcoin. Is it to you this is a pump and dump Ponzi?
Okay, I won't personally think it's a pump and dump because Bitcoin, to be honest, is a bit too, the market cap is a bit too high, I think, already at this point in time. Ethereum probably as well, for it to be a pump and dump. Neither is it a Ponzi, right? Because a Ponzi scheme means like, I have to sell it to someone for higher. Okay, I mean, there is some element of that, but it's not in a traditional Ponzi scheme where it's a company that's just selling you products but have no real earnings, right? For this, is an instrument on its own. I think the main risk, as alluded to by both Jared and 𝗪𝘃, is really speculations, right? So I give you an example of speculation, which I think most of us can understand. So let's not worry about Bitcoin for a second. You go and check GameStop share price right now, right? Some of you already know what I'm talking about, right? So for those of you who are unaware, 1st May, I think the share price was about GameStop about $10, right? And I think earlier this week, so 1st May this year, so just earlier this month, right? So today is what, 16 May? Is it 16 May, right? 18 May, all right, okay. So earlier this week, it went up to as high as $40, right? And then since then, it's gone down a little bit to $20-something. So you're still double up, right now, or 4 times up, if you sell a bit earlier this week. And all of us here can understand GameStop didn't really materially change, right? It's a company. But all of us know it's speculative, right? It's obviously speculative dollars that have pushed the price up, right? And if you were to buy into the hype, you might make money if you, buy it quickly and then you sell it quickly. But if you buy it, let's say at $40, right, at the high, which is I think earlier this week, now it's $20-something already, right? This is clearly speculative wins or speculative loss. And that to some extent is the same for an asset class like Bitcoin, right? Because nothing has materially changed. I mean, you hear all the things about they halve it, the Fed's, pull back interest rate, all this, how it might affect. Yeah, all these macro reasons are there to justify why the price moved. But the truth is the price moved for speculative reasons, right? It's just as simple as that, right? And if you want to talk about something that has also moved, you think of it. Another way to think about cryptocurrency is just to look at like the exchanges that are traded. So like Coinbase, for example. So Bitcoin has gone up, I think, I'm looking at my stats, my numbers here. Last year, about up 150%. So on a 12 months basis. If you look at Coinbase share price, it's up more than 200% over the past 12 months. This is an actual company that is also obviously, has its fate tied to cryptocurrency because they make based on price and volume traded. And, you can actually make more investing in the company than in the crypto itself, right? Does it mean that, Coinbase one is more legitimate? I think not necessarily true. Again, we know shares can be speculated, but if you apply that logic to cryptocurrency like Bitcoin, it's a speculative reasons. There are some use case scenario, but the use case scenario doesn't push the price up 2 times within 12 months. All right? Because everybody already know all these things a long time ago.
Thanks, Timothy. So seems like Bitcoin is very speculative. So Singapore is one of the top financial hubs in the world. What is our government or MAS perspective on cryptocurrencies? Maybe Chen can share with us.
Okay, since Timothy brought up GameStop, I'd just like to share that my team has also put up an article on why you shouldn't buy GameStop. So if you are thinking about buying GameStop, please check the article out before you make your decision. Okay, so back to the question. I think the MAS generally has one of its objectives is, of course, to develop Singapore as Asia's premier financial hub. So that being said, I think they're open to newer innovations, fintech, digital asset innovation, such as blockchain technology. But that being said, I think given the number of high-profile cryptocurrency scams and collapses that we have witnessed over the past few years or so, they have also reiterated their cautionary stance on cryptos, especially when it comes to retail investors. I think they have made repeated warnings that trading cryptos, they are extremely speculative and should not be done by the general public. And yeah, I think to sum up the question, I'll borrow one of the titles of one of their previous presentations, which is yes to digital asset innovation and no to cryptocurrency speculation.
Seems to memorize quite a bit from the MES. So for my interactions with the young generations, they tend to tell me that, they rather invest in cryptocurrencies against the traditional equities, UT, or fixed income. Maybe Gerald, you share with us, since you have some, you look young as well, maybe you can tell us what are the appealing reasons.
Okay, actually, I'm not so young. I'm 40 this year already. Okay, in terms of my conversation with the younger people, including my intern and other investors that I have the opportunity to speak to, I think in terms of how some of them think about crypto, just to understand the mindset that they're coming from, oftentimes because in terms of the capital that they might have, they might be starting to invest with $100, $200. And if I were to ask them to say invest in, say, T-bill, that might be something that they may not actually get a lot of returns with in the near term. And then they say, if I'm just earning 4% per year, why do I actually bother? Because that might just get me an additional maybe $40 if I invest $1,000 in 1 year. So I think it is really the potential for them to make a big win, but then at the same time, that also comes with significant risk because as we know, for things that come through with potentially higher return, they also come through with higher risk. So I think that is the part that we have just been trying to highlight in that there's no free lunch and that if you want to be looking out for potentially higher returns through a speculative asset, then what are the risks that come through with it? But then at the same time, what we can also share with them from an educational perspective is that even if you're starting out with investing with $100, $200, there are other things that you can do as well. Say a regular savings plan into ETF. It may not be something that can potentially double in, say, 1 year. But then at the same time, with the power of compounding through time, that is something that can allow our money to grow as well.
Thanks, Gerald. Yeah, so I think the education point is actually quite important. So now that we have the Bitcoin ETF listed in US and Hong Kong exchange, does this mean that this asset class is here to stay? And more financial institutions like bank, hedge fund, and pension fund be buying into them? Maybe Timothy can share some with us?
Yeah, I think that's a great question, Joshua. And I think a lot of you are probably thinking about that as well, right? So that's obviously one of the things that make the news, which is that now you have a Bitcoin ETF that is traded on the exchange, right? So does that mean financial institutions are very interested now, see, I told you so 5 years ago, that kind of thing, right? I think in a way, somewhat yes, in the sense that I think Bitcoin has shown a bit of that resilience as a cryptocurrency, as a cryptocurrency exchange, as a cryptocurrency. I don't want to say token, but it's just a cryptocurrency. So yes, it has shown a little bit of resilience. And generally speaking, the financial institutions, I know we are in a finance event, there are financial institutions downstairs, they are going to look at the areas where that the pie can grow, right? And if investors are interested to invest, then why not, right? Why not also get into it, create an ETF? There'll be people like us who understand what an ETF is and it's more convenient for us to invest. So yes, I think to some extent it's here to stay. This doesn't mean that the price will go up or down, but it just means that there's now institutional dollars involved, right? It's no difference from if you look at some of the meme stocks, right? It started because there's also hedge funds, institutional dollars involved. So just because there's institutional dollars involved doesn't mean you usually will make money, as we can tell, right? Because the institution investing, the hedge funds investing, doesn't mean that, oh, this must be good, that's why they invest. That they invest for their own reasons. I think we need to look at it from a retail investor's point of view, right? If you're running a fund and it has billions of dollars and you have to kind of like diversify it a little bit, you may choose cryptocurrency by a tactical play, just in the off chance that it really goes up. But I think if we look at our own individual portfolio as retail investors, you ask yourself how much money you have to invest, right? $50,000, $100,000. Then you ask yourself, is your money really best put, even if it's a tactical allocation, is it best used to be put in that way? Or is there better, more sustainable investments that can give you returns over time rather than, when the markets are up and down, right? I give you all another example that has, kind of like affected Singapore's startup ecosystem as well, right? A lot of institutions were very interested in startups and VC investments, right? Because in the last few years, interest rates were low. A lot of people looking for VC investments. Everyone wants to invest in the next unicorn, right? So a lot of institutional dollars were going in. But if you look at the current situation now, especially for startups that have not turned a profit, they are all retrenching people, right? So just because the institutions wants to get involved doesn't mean that it will be sure to fly, right? So if you invest in I'm not going to put names, but let's say you invest in a startup, somehow you could invest in a startup, say 24 months ago, right, at a valuation very high, right? Then now, because interest rates goes up, no money is going into, the price will drop already, right? So it doesn't mean that just because institutions are going in, you will get a good return, right? So I think that is the caution we have to take note. I just want to add one more thing that I want to just to add on, which is that I think Bitcoin, to a certain extent, does behave like an asset class where you can see a lot of traders trading it, right? So if you use a bit of the technical analysis reasoning to look at a product like Bitcoin, you can see that there is that behavior that it tends to exhibit, support, resistance type of kind of concept. I'm not going to go into details, but so it is a product that people can trade. But doesn't mean it could be a product you can invest in, all right? So just have to be discerning here.
Okay, if I feel like feeling young and I want to have some interest or gaining some small exposures to Bitcoin, should I buy a Bitcoin ETF or should I buy through a centralized crypto exchange like Binance? And what are the differences between these two methods? Maybe 𝗪𝘃 can share with us?
Yeah, I think there are several differences between buying a Bitcoin directly from a Bitcoin exchange and a normal stock exchange through an ETF. So some of the notable differences would be the type of ownership, whether it's indirect or direct, and also the kind of fees that are charged. But for me, I think the biggest difference would be the flexibility. So if you buy a Bitcoin ETF, you are subject to exchange trading hours. It's usually Mondays to Fridays. Whereas if you buy Bitcoin directly, you can trade 24/7, which also means that over the weekend, if there's something that happens, you can react to it. You can buy more, you can sell, so you can react faster. If you buy an ETF, you have to wait until Monday, and by the time Monday comes, the news is already priced in. Prices would have already moved already. So that's one of the differences. But that being said, so it seems like buying a Bitcoin on directly through a Bitcoin exchange would be safer. But yeah, I think one of the risks associated with Bitcoin exchanges is that we have seen multiple collapses over the past decade or even longer. So in the past, you have things like Mt. Gox, Quadriga, and most recently FTX who went bust. And I don't think you've heard of any stories of any stock exchanges going bust. Can you imagine SGX going bust? Yeah, I don't think many people can imagine that. So
SGX is here today.
Yeah, exactly. So yeah, I guess buying on stock exchange has a certain level of safety also.
Thanks, 𝗪𝘃. Okay, maybe to wrap it up, for investors that still prefer sound fundamental investing, maybe you can plug the brains from the three panelists. What are your current preferred investment ideas? Maybe start from Timothy?
Yeah, for me, it's always been what so it's not current, it's just something I always think is valuable. Just think globalization. So I think globalization very, very important, especially in today's world. I know the Singapore Exchange is here, but I'm just going to say globalization is very, very important, all right? The second thing is diversification, right? So you cannot, and diversification doesn't mean like across just asset class, but never be overly, I see a lot of young people actually being very drawn towards a specific theme. So a few years ago is technology stocks, right? Technology companies. Now everyone is talking about AI. Right? Never been, or EV, for example, but never been overly convinced about a certain theme, right? I always like to invest with the presumption that I'm wrong, right? Because somehow it always happens. Like I invest, then the share price goes down right after I invest. All right. Then I invest into ETF, then also go down, right? So what I do to overcome that problem is that you just have to presume you are wrong and always invest in a conservative way, which leads me to my third thing, which is that have a long-term approach. Never think of your timeline 1 to 2 years, right? So because markets go in cycles, so it's very easy to catch the wave when it's going down, right? Especially if you believe in Murphy's Law, which is when you invest and it goes down, right? So to overcome that, you need to have long-term, right? Because if you have long-term, you DCA in, when it goes down, it's actually where your returns are made, not where your returns are lost, right? Because when you invest on the low, when it goes up, that's where you invested in because you DCA, so you bought more units when prices are lower. So that's my 3 things.
Maybe to add on to what Tim has shared in terms of global portfolio as well as diversification, I think a question that we commonly get is always when the asset class is at an all-time high, we'll get a lot of interest into it. So when the S&P 500 exceeded 5,002, we got a lot of questions on what's the best S&P 500 ETF. When gold hit an all-time high, people were asking what is the best way to get exposure to gold. But actually, interestingly, if you look at one of the best performing markets so far this year, it is actually China, especially after the way that it has recovered over the past few weeks. So I think going back to the part around the need to have a diversified portfolio, in this case, maybe I'll just leave a thought in that it might not be so bad an idea to diversify away from just, say, US AI tech stocks, Magnificent 7, or even the S&P 500, because as we have seen in terms of the Chinese market performance so far this year, just having a global asset allocation might be the way to actually allow us to get consistent returns regardless of which is the market that performs the best.
Jin, how about you?
Okay, so I'll share 2 ideas. So one of them is, of course, semiconductors, like what I've shared earlier. So the second idea that I really like myself is shorter duration bonds. So I think fixed income is an asset class that is not talked about enough, especially in the current interest rate environment. And why shorter duration bonds is because I think at the start of the year, many investors, they were still pricing in the Fed to cut rates by 6 times. But fast forward to today, the consensus is the Fed is likely not going to cut rates at all in 2024. So that also means that the shorter end yields will remain high, and that's good for investors like you and I. And if you ask me why not longer duration bonds, what I would say is, I think the yield on longer duration bonds, they are still not attractive enough. I think if rates stay high or rates go even higher, given that inflation in the US has been rising, I think if you buy longer duration bonds now, you're going to suffer. So if you're looking for somewhere safe to park your cash, earn some returns, perhaps beat inflation, I think shorter duration bonds, they are a good place for you guys to consider. You guys can consider the SGD money market funds, or if you have USD, they can potentially earn higher yields of around maybe 4+, perhaps even 5+%. I think those are some good options for you guys to consider.
Or you can put aside USD auto sweep around 4.5 to 4.7%. Thank you, Timothy, Gerald, and Jin for sharing your valuable insight. Maybe to sum up the discussions, we encourage investors that are trying to attain financial independence to stick with sound fundamentals investments when constructing a long-term portfolio. However, for investors who have a very strong appetite for risk and wish to put certain allocations into Bitcoin, we will suggest them to invest via the ETF that are listed on the exchanges, such as the iShares Bitcoin ETF. As what mentioned by Jin, investing directly via a cryptocurrencies exchange does pose a serious counterparty risk, as seen from previous cases. Thank you for attending today's sessions. Have a nice day, guys.
Thank you.
Thank you very much, gentlemen.